Hey traders, welcome to time to caffeinate and dominate. Great to see you all. I think the biggest conversation, the only conversation really today, is not my Twitter. There we go. Not my Twitter page, but rather the economic calendar and taking a look at what we have by way of significant, high impact, high volatility, scheduled events, AKA hot zones, and parked right there in the middle of the screen. As you can see there, I'm looking for my drawing tools. Where are they? There we go. Right there, FOMC. Now, Brainerd will be speaking before that, which, look, it's Lyle Brainerd. She's definitely moved up in the echelons of Feddom, and it could be an interesting opportunity for traders to front run what the messaging may be in the meeting minutes, an hour and 45 minutes before that. So 12:15 Eastern is going to be a time to watch, as will 2 p.m. Eastern. We have our core durable goods numbers already out, but again, on a day where we have these two hot zones coming up, probably not necessarily as meaningful, although we'll take a quick look. Tomorrow, GDP at 8:30. We've got Bullard. We've got PCEs. We've got, we have tomorrow's GDP, pending home sales, of course, the weekly unemployment claims numbers, Bullard and PCE, and that's going to round out our week. The most important data point, as far as I'm concerned this week, is actually PCE, even more so than yesterday's Powell, pre-recorded, whatever that was, even more important than the FOMC minutes, because most of us, especially if you've been following the analysis that I've been sharing with you all, most of us take a look at the Fed Fund futures and we're able to, well, I shouldn't assume most of us, but many of us take a look at the Fed Fund futures and we notice that for June, for July, we are factoring in, 50 basis points, half a point hikes. So that means that going into the September meeting, we are likely going to see another 25%, but we are likely going to be 1 full percentage point higher going into that September 21 meeting. That's significant in terms of rates. And that should, although this week it doesn't look like it, that should get the US dollar uptrend back on track, which it seems to be gripping, kind of hanging on to that very lower edge of the wave. That should get the euro, 6E, FXE, back down to its general trend, right? Generally up for the dollar, generally down for the euro. Now, remember, when the ECB shifted into messaging that focused on, one, they're going to move out of negative deposit rates, and two, they're open to rate hikes, there had to be some adjustments for ECB triggered euro strength. And that just happened to just sort of piggyback the sort of normal profit-taking fatigue, correction, retracement, pullback, whatever you want to call it, that was occurring in the dollar, sort of exaggerating the move. And I think we saw a lot of that across the treasuries, across the currencies. So between that now being discounted and going into the FOMC meeting minutes and the PCE, if we're going to see resumptions of trends, that could be the currencies, euro and dollar most specifically, treasuries, a 10-year and the 30-year, and even gold, which of course has a sensitivity to real yields. All my cards on the table. We shorted gold yesterday, long GLD puts or GC futures, MGC even, which is a fantastic way for futures traders to not have to commit quite as much initial margin and still be able to put on a lower cost, and also from a per point dollar value, lower risk trade. So that's moving along pretty well. That's a reflection of real yields. Looking like the market wants to recognize the trends that were in place and get back on track. ZB and ZN are still dragging their feet a bit. That's okay. We still have lots of data coming up, and we don't presume all trends are going to continue trending. They might transition into chop, which, by the way, still carries with it the prior bias of the up or down trend. So that's what we've got coming up today. As always, though, gang, the show is about your questions. So let's go ahead and kick it off at the very top. Oh, the list. We've got, let's see, let me move these charts out of the way. Awesome. All right. RF, are bonds and potentially euro setting up a trend reversal? I don't think so. No, I don't. However, the second part of your question, and I'm going to do my best in 2022 to answer the way that a lot of people that are in my position, privileged enough to be in my position, should answer. I don't know, right? We should know what the levels that would trigger a reversal or that would trigger a continuation are, right? So rather than prediction, right, we stick with process. Prediction is, I know where the markets are going. I wish I did. Process is, if we break this threshold with, XYZ confirmation, there's a probability of follow through in that direction. And if we break this level with certain confirmation, there's a probability of directional follow through in another direction. And so it's all about finding those reaction or decision levels on a chart. So A, don't know. B, that's a great question. Could the Fed minutes play a big part? And I think that the answer, based on what we talked about just now, is a resounding yes. So thank you for the question. Can I please explain the relationship between the dollar, bonds, and FXE? So dollar and euro. So I don't use DXY, but doesn't matter. UUP, DX, FXE really should be a 6E or even euro US conversation. But dollar and euro have an inverse or negative correlation. And bonds, is there a relationship to bonds and the dollar and the euro? So look at it this way. The bonds are not moving because of the dollar. The dollar, bonds, and euro are moving because of monetary policy or inflation expectations or messaging from the Fed. So they're all looking at the same catalyst, but they're not necessarily catalysts for each other. Okay, so dollar and euro have a relationship, and then bonds will key off some of the same macroeconomic data that dollar and euro respond to, but not to each other necessarily. Again, dollar and euro, yes, leave the bonds out of that group. So there you go. Can we take a look at TLT? Sure. All right, so taking a look at TLT. And if you all have, look, I don't mind to look at a symbol and break it down, but I would love to know what you all are seeing, right? Because what we try to do here is get into how can we find a setup? How can we better, so I'm happy to break it down, but I love when you all say, hey, what about this? And relationships. So TLT, it's a downtrend, Zion. It's a downtrend. Moving on can we take a look at P10 in the oil sector? So what's going on with oil? So I'm happy to look at P10, but what's the reason for that particular? You all who've been here at Charts and Coffee. So I'm going to put the teacher hat on here for a moment because I've been very lucky to have lots of great teachers. So when I would go to my mentor, my teacher, and say, hey, this is what I'm seeing here, I would get a great answer. If I said, what do you think of gold? Crickets. So what I would love is when we look at a market, let me know what you're seeing, because that's the best way I can help you, saying, I'm seeing something different or I'm seeing something similar. So oil sector, I'm really not interested in, Giancarlos. I'm much more interested in RBOB gasoline and natural gas, because crude oil is not in a trend. So then, that distinction is huge, right? And so I got a good idea of what you're sort of tying together, right? P10 and oil. But the clarity is coming from natural gas. And the clarity is coming from RBOB, and that's going to really map to FCG and XOP, right? That's going to map to those conversations a little bit more, because that's where gasoline and natty gas are more heavily weighted. As far as PTEN, there's no clarity. So what am I always going to say for those of you that have been joining me for Charts and Coffee? Start with, why does P10 earn a spot on the watch list? B, I think a lot of watch lists are entirely too generous with what gets to be included. When I see a watch list that's 40 symbols long, I know for me, I did not do my work, because a watch list really should, the job of building a watch list is eliminating certain stocks or currencies or symbols in general from contention. So it's a whittling away process, and P10 just wouldn't cut it if there are better up or down trends, because P10's on a trend at all. So the second tier watch list goes to markets that are in consolidation or congestion. But that first tier, my friend, keep an eye on the trends. You'll be so much better off in terms of the quality of the setup and the most important part of a setup, the follow through. All right. What about RCL as a short? All right, let's see. Yeah, Royal Caribbean, sure. Yeah, that's gosh, it's a heck of a downtrend. But you know what I'm gonna say, right, Stephen? I need a bounce. I need a rip, even if it's to the 8 propulsion like we saw back on May 17. So this thing is in free fall, no doubt. No doubt. So as a short, definitely on that watch list. Very nice. But at current levels, not yet. Not yet. MNRL, not a trend. Do I like the long side of that? I'm with you there, but not a trend. So go find out who MNRL, Brigham Minerals, who are they hanging out with, right? Who are they hanging out with? And is there better structure within that group? As far as an exit goes, look at the Darvis, the Darby. I would start paying attention to between 28 and 28.20. And for those of you that, if you don't have the Darvis running on your charts, if you don't have the Darvis running on your charts, head on over to countdowntrader.com and download the Darvis 2.0. We have it for TradingView, which is the platform that I'm on right now. It's built into the TradingView platform. Just search simpler under the indicators. And if you're on TOS, head on over to countdowntrader.com and you can download the ThinkScript for the Darvis 2.0 automated support and resistance from that site. Free. Did I mention free? All right, moving on to good morning, my friend. Yep, caffeinate and dominate gang. Good stuff. Next up, do I have a rule? How many percentage indices? Okay, let me read this here. How many percentage? I don't, maybe it's too early and my caffeine hasn't kicked in. Evelina, beautiful name, by the way. I don't quite understand the question. Do I have a rule on how many percentage indices up that you will not buy anything on that day? Oh, well, if the indices are up, I'm not buying anything anyway. So does that make sense? Most traders like to buy on up days, not this girl. Case in point, if I'm understanding the question right. So yesterday, the office tweeted this. I can't say I'm happy about it. Can't say I'm not happy about it. 4 days of photos and filming, and I forgot what I was making fun of, but that's the face I make when I'm even thinking about buying a market heading higher or shorting a market heading lower. So do I have a rule? Yeah, I won't do it. I hope that helps. The same percentage rule for the stock itself. So the second part of that, if I'm understanding your question, is 2 things. One, I will not buy a market heading higher. I will not short a market heading lower. I'm a retracement trader. We're taking advantage of trends on pullbacks and bounces. Second part is, let's say it does come back and retrace, uptrend or downtrend. If that move exceeds the historical volatility for that symbol, I will recommend a pause day. So that's the way that I look at that. That's the way that I look at that. So do I use a daily range? I use historical volatility. I think for a lot that you might be referring to ATR, I don't look at the ATR. I don't care what it says, not even a little bit. I use the cousin of average true range, which is frankly a better way of understanding movement, which is historical volatility. And so while PMRs, price movement ranges, that's what I use. And ATRs are very similar. They're calculated differently enough. And I find PMRs far more effective. It doesn't matter which, look, as long as you're measuring one of them, though, that's the important part, right? Chocolate ice cream, vanilla ice cream, they're both ice cream. We kind of pick our favorites. My preference is for the historical volatility calculation. So thank you for the question. And I hope I got that, the meaning of that. So thank you. Next up, is there a YouTube or Reddit or Twitter that summarizes FOMC minutes when they come out? Wall Street Journal has a statement tracker. That's a cool one. But as far as the minutes go, we want to know, I would say, what I would recommend, and I say this really hesitatingly, I'll turn the television on. This is one of the few moments that financial television is even remotely helpful, which is because they have, and let's also respect the platform that they have. Their influence is far-reaching, and oftentimes will create the belief of what that means for the broadest group of people. So turn on the TV and see what the talking heads say about it, because that's probably going to be the most accepted, most broadcasted, widespread take. And whether it's right or wrong is irrelevant. It's how broadly is it spread, and television has that ability. All right, next up, thank you for the great teaching. My pleasure. I have my moments. Puts on gold is a swing trade. Yes. Overnight. And I'm taking advantage of the trend that's in place. Is UUP looking good? I think so. CL is trading water. Completely agreed. I don't like the CL because it's not trending. There are certain oil stocks that are trending, kind of back to that P10 question. And RBOB, gasoline, natural gas, those are still trending. So my preference is going to be there. Ravi asks, is QQQ heading for a new low? Gang, you know what I'm going to say? I don't know. But the path of least resistance is down, right? The path of least resistance is down. So if someone was going to say, Rag, the river is flowing south, am I going to assume that more southern movement of the river is likely? Yes. Is it likely the river is going to start to turn north? Probably not, right? Trends the same way. It's more probable that we will continue to head lower than head higher. And I don't know where the low is. And Robbie, guess what? Nobody else does either. Top and bottom pickers, though, they have a bravado. Look, there's a truth that we all have to accept. If you repeat something with enough confidence, often enough, even if it's absolutely categorically a guess, people will take it as fact. And so the truth of the matter is, and a lot of people in my position should just say, I don't know what happens next. But I do know if this level or this level is tested, there's a probability for follow through. That is trading, right? Process is trading. Prediction, well, that's what those chuckleheads on TV do. Please, please, please don't succumb to that, right? And I know you all aren't, but it's so easy to get inundated by people who are going to predict where a market is going. If something's heading lower, that's, by the way, why trends work for us traders and investors so well. It increases the probability of follow through, right? Makes sense. So do I think we're likely to keep moving lower? I think so. Are we likely to bounce? I have no idea. However, because we do have FOMC meeting minutes today, we have GDP tomorrow, we have PCE on Friday. Those are three major hot zones that have the ability to create catalysts for a more intense discounting of sort of new information. If inflation is not as hot, watch the equities rally. If GDP is fairly strong, equities could rally. If the FOMC minutes even sound a little less hawkish than what we're expecting the FOMC to do based on Fed fund futures, we might see a rally. So there are specific events, data releases that could trigger some momentum in another direction. Would it establish a bottom? Very, very unlikely. That's my take on probability. All right. Which charting platform do I use most in my trading? I toggle between Thinkorswim and TradingView fed by my TradeStation data feed. That's it. That's it. I recommend anyone use what they're most comfortable with. I think these two platforms for what we do are solid. Probably the most popular platform at this in the simpler community is Thinkorswim. That's one of the reasons I use it. I want to use the sort of same platform that most of my members are on. And then TradingView is a great broker agnostic web-based platform that I think everyone could have as a backup. It runs on the phone. It's very flexible. It's very good. And slowly, I have migrated all my indicators to both of those two platforms. So that's what I support the most. Okay. So as always, gang, thank you so much for your questions. I love when we can get a little bit more nitty gritty than, just symbol calling. And I appreciate the thoughtfulness of the questions. You all are just impressive. When I look at the comments later on and I look back, what a great crew you all are, the Caffeinate and Dominate team. Awesome. Just awesome. Thank you as always. I'll see you tomorrow, same time, same station. Be good to each other. 2 p.m. FOMC minutes today, gang. Brainerd at 12:15. So we've got a lot going on in a very about 2-hour tight window. All right. I'll catch you in the next show.